This is Matt Russell, and welcome to the DailyFX Forum.
So welcome to the DailyFX Forum Highlights video, November 3rd, 3 a.m. So just scrolling through the forum this evening, I found an interesting post here by DJ Mace. Basically, he was trying to find an alternate count, if you will, or just an alternate view in the market, as many traders right now are bearish on the euro dollar. And here's his chart. Anyone care to give an opinion on the chart below? I'm thinking as everyone else became bearish on the euro, to present an alternate chart, and that's always a great idea. And anytime you form any opinion, and especially if it's a relatively strong opinion, you always should think, what if I'm wrong, and what is the opposite opinion? So with that being said, I'm going to pull up the charts now. And actually, before the recent bearishness began, I remember thinking, I think in like the mid 145s or something like that, that prices could head to this area, which is about the 52.80 area. I recall as prices, there was a doji up here, and prices fell beneath. And I remember at this stage over here identifying, calling this, you can call this an island gap. I mean, technically it's not, because you can't have gaps in the foreign exchange market. But in a relative sense, as you can see the price action, I would consider this to be an island gap. And again, the currency markets are so incredibly efficient that you don't need these patterns to be precise. You don't need the actual gaps per se, let's say, in foreign exchange. So moving forward now, I would not agree with it, but it is just an alternate scenario in my mind. And you think about all the bearishness out there and what would hurt the most, and maybe a move up to that 152.80 area again to kind of fill that gap. Although the thing with island gaps is that they're not supposed to fill. With that being said, prices are already up, have peaked their head above the gap a little bit, and then reversed. So this would be the island gap area right here between 52.80 and this price point here, excuse me, which is about, let me get the precise level, just beneath that 150 figure. So again, it's not something I think is going to happen. I don't know what's going to happen, but it is an alternate scenario to keep an eye on. So heading back to the forums now, I wanted to head over to the dollar-yen chart, a chart that I haven't really looked at in a while. And what I wanted to highlight here, Jeremy had a recent post in terms of the short-term chart. He had a wedge pattern, which I'll show you in a second, right here. Prices are getting wedged in, and MACD might cross over zero again. But scrolling up, I wanted to highlight JRAD's chart. I spoke about this yesterday, the inverted head and shoulder pattern. And I want to go ahead and just pull up the dollar-yen chart and tell you what I'm thinking. Personally, again, I don't trade the dollar-yen, but just looking at this chart, kind of, in an abstract sense from across the room, which is usually the best analysis, we could just see an impulse wave down, and actually an impulse wave up here, and then corrective action here. So again, I would argue this could be a 1-2, and prices could be heading much higher. It could be, that inverted head and shoulder pattern as well. We might draw just a simple resistance line here and see if price action can take out that line. Of course, anything can and will happen. If we zoom in a little bit, I'd notice this long wick on a daily candle here, so I might have a slight bullish bias against the low of that candle, which is about the 89.17 area. But again, these are just alternate scenarios that I'm putting forth now, and that's one of the benefits of the DailyFX forum, is it gives you an opportunity to hear other traders, see what other traders are thinking, and not necessarily listen to them, and you certainly don't happen, you shouldn't listen to me, but it's a great way to get trade ideas and get things together and get them in your head, and kind of make sure you're seeing things in the proper way, because again, it's great to see other people's perspective of the price action, and it could be something as simple as a different time frame, or you might be looking at a 1-year daily chart, and if you looked, if you went back 14 months rather than 12 months, there might be another price point which will skew a support or resistance line or something like that. Again, my name is Matt Russell. Thank you for listening.